Let us see our next question. BT Pathology Lab Limited is using an X-ray machinery which reached at the end of their useful lives. Following new X-ray machines are of the two different brand with the same features are available for the purchase. So we are using an X-ray machinery which we are considering to now replace, because the existing machinery, that is X-ray machinery, has come to an end of its useful life. Brand XYZ and ABC. The price is given 6 lakhs and 4,50,000. Life is importantly 15 years and 10 years. Maintenance cost during this 15 years of the life is given, and during this 10 years of the right is given, that is 10 years of the life is given. Rate of depreciation is given. Residual value of both above machines shall be dropped by 1/3 of the purchase price in the first year, and thereafter shall be depreciated at the rate mentioned above, that is 4% and 6% for each of the machinery. Alternatively, the machine brand of ABC, so only ABC brand machinery, can be taken on rent and returned back to the owner after you use on the following terms and conditions. Annual rent shall be paid in the beginning of each year. This is important. And for the first year it shall be rupees 1,02,000. Annual rent for the subsequent 4 years will be 1,02,500. So that is an increase by 500 rupees. Annual rent shall be for the final 5 years, that is 6th year to 10th year. Because this machinery has, X-ray machine has total useful life 10 years. So for the final 5 years shall be 1,09,950. The rent agreement can be terminated. So you can close down the agreement by BT Labs by making a payment of rupees 1 lakh as a penalty. This penalty would be reduced by rupees 10,000 each year of the period of the rental agreement. You are required to advise which brand of X-ray machinery should be acquired, assuming that the use of the machinery shall be continued for 20 years. B. State which of the option is most economical if machine is likely to be used for a period of only 5 years. The discounting rate or cost of capital is 12%. This is a question from the revisionary test paper of C Intermediate of May 2019, and it was for 5, that is question number 5. I request all of you to go through the question, then we will discuss how to do answer. So dear students, over here the question is divided into 2 parts. In the first part of the question, we are required to make the computation if at all the machines are going to be used for a time period which is exceeding the useful life of both the machineries, that is 15 years and 10 years in our example. So definitely in the first part of the question, we have to go with the equalized annual approach for the purpose of decision making. Again, this is a question in which the revenue information is not there, only cost information is there. So we have to make a comparison of the cost, and the option which is having the lower equalized annual cash outflow will be selected. We will evaluate all the 3 alternatives. First, buy X. Second, buy A. Third, rent of A. For all 3 of them, we'll make the computation of the equalized annual cash outflow. And that is the way we are supposed to take the decision. Over here, directly or indirectly, no tax information is given. So we just have to ignore the taxation for the purpose of making calculation of answer. So let us start making calculation of answer. Answer for the A part of the question. In that, write down decision making about purchase of machine XYZ or ABC or taking on rent machine ABC. In that, write down the paragraph. Importantly, in A part of the question, comma, we have been given to take decision for use of asset exceeding their useful life. Full stop. So we will use EACO. In bracket I am writing equalized annual cash outflow for the purpose of comparison. Full stop. Option number 1, XYZ purchase. In that, step number 1, investment. Dear students, the amount of investment will be 6 lakhs of rupees. Rupees 6 lakhs in the year 0. Step number 2, depreciation. Ignore, because there is no tax. Step number 3, terminal cash flow. In that, there is no computation of the capital gain or loss on the sale of asset. Directly scrap value of machinery. It is 6 lakh rupees purchase price minus 6 lakhs into 1 by 3. Because in the very first year it will reduce by 1/3 minus 6 lakhs rupees into. The question is providing the information that say afterwards it will depreciate at the rate mentioned above, that is at the rate of 4% for 14 years. Because 1 year we already have considered the depreciation. So 6 lakhs into 6% into, 4%. 4% into 15 minus 1. That is, say, for a time period of 14 years. So 6 lakhs minus 2 lakhs minus 6 lakhs into 4 percentage. 24,000 rupees is a reduction for 14 years. So 3,36,000. So the salvage value is an amount of rupees 64,000. And this amount is going to be received year 15 end. This is what we understand. So step number 4, recurring cash flow. Dear students, for that the maintenance costs have been provided to us. This year 1 to year 15, that is the only recurring cash flow that we will have. So it is year 1 to year 5, year 6 to year 10, and year 11 to year 15. The maintenance cost, no tax effect is required to be taken, no depreciation tax saving or expense tax saving is required to be considered. So this is year 1 to year 15. Step number 5, calculation of present value cash outflow and equalize the annual cash outflow. So we understand year 1 to year 5, year 6 to year 10, then year 11 to year 14 and 15th year. That is the way we will have, say, year 1 to year 15 cash flow series. Okay. So year 1 to year 5, there is cash outflow of 20,000. 6 to 10, it is 28,000. 11 to 14, it is 39,000. Last year, what will happen, friends? Cash outflow of 39,000 plus there is cash inflow of 64,000. That is the scrap value to be received. So 39,000 is outflow, 64,000 is inflow. So it is 25,000 is the net cash inflow. Now it will be discounted at the rate of 12% and present value. 1 divided by 1.12. 1, 2, 3, 4, 5. The first 5 years factor is 3.6048. 1 divided by 1.12. 1, 2, 3, 4, 5. So first 5 years I have calculated, but it is of no use to me. 6th year factor n plus 7, 7, 8, 8, 9, 9, 10, 10. So 6th year to 10th year factor I have added to memory plus. So 2.0454. 1 divided by 1.12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. First 10 years factors are of no use to us. 11, 11. 12, 12. 13, 13. 14, 14. So 11 to 14 factors are in the memory plus 0.9779. 1.12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 0.1827. This is the way the discounting factors will be calculated year 1 to year 15. So I am explaining the discounting factor calculation. 1 divided by 1.12. I am explaining the factor calculation of first 5 years. First year factor added to memory plus. Second year memory plus. Third year memory plus. Fourth year memory plus. Fifth year memory plus. Now memory recall. You get the 1 to 5 factor summation. Now I am explaining the discounting factor calculation of 6 to 10. So 1 divided by 1.12. First year, second year, third year, fourth year, fifth year. I am not concerned with that. Sixth year, memory plus. Seventh year, memory plus. Eighth year, memory plus. Ninth year, memory plus. 10th year, memory plus. So 6 to 10 factors have been added to memory plus. Now memory recall. And you can see it is 2.0454. Now explaining 11 to 14. 1 divided by 1.12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So first 10 years factors which are of no use to me. 11 memory plus, 12 memory plus, 13 memory plus, 14 memory plus. So 11 to 14 calculate, that is factors are calculated and added to memory plus. Now memory recall. You can see 0.9779. So friends, what we have done, we have computed the present value, the factor, now present value of the cash flow. 20,000 into 3.6048. So it is 72,096, that is negative. Then 28,000 into 2.0454. Again it is negative 57,271.2. 39,000 into 0.9779. Again negative 38,138.10. And last year it is 25,000 into 0.1827, that is M plus. So it is 4,567.50. Total of this comes to 1,62,937.8 plus investment. The investment that we have made is an amount of 6 lakhs. And this is the present value of the cash outflow. And the present value of the cash outflow is 7,62,937.8. And this is of course for the year 0, and this is present value cash outflow. So this is the present value cash outflow. Now we'll compute the equalized annual cash outflow. It is present value of cash outflow divided by PVIFA at the rate of 12% for 15 years. 7,62,937.8 divided by annuity factor at 12% for 15 years. So in that case it is 3.6048 plus 2.0454 plus 0.9779 plus 0.1827, 6.8108. 6.8108. So the final answer is 762,937.8 divided by annuity factor 1,12,018.82. This is the way equalized annual cash outflow can be calculated. Now the option number 2 is acquisition of X-ray machine ABC. Option number 2, purchase X-ray machine ABC. This is what we understand. Again, step number 1 is investment. It has been given that say this machinery has purchase price of 4,50,000, that is year 0 cash outflow. Year 0, 4,50,000. Step number 2 is depreciation. Again we are ignoring it. Why? Because there is no tax effect. Step number 3, terminal cash flow. Terminal cash flow is consisting of only the scrap value of the machinery. So scrap value is equal to cost minus depreciation. Cost is 4,50,000 minus 1 by 3 into 4,50,000 for the first year minus 4,50,000 into rate of depreciation for the remaining years is provided as 6%. So into 6% for 9 years. So 4,50,000 minus 1,50,000 minus 450 into 6%, that comes to 27,000 into 9 years, 2,43,000. 243 and 150, 393 subtracted from 450, so it is 57,000. That is the scrap value of the machinery terminal cash inflow. Step number 4, recurring cash flow. It is year 1 to year 5, year 6 to year 10. Cash flow 31,000 and 53,000. That is what we have year 1 to year 5 and year 6 to year 10. Step number 5, calculation of present value of cash outflow and equalized annual cash outflow. That is what we are required to compute. In that PVCO, year 1 to year 5, year 6 to year 9 and 10th year. Cash flow, it is 31,000 outflow. It is 53,000 outflow. For the last year, 53,000 is outflow plus cash inflow in form of scrap value of the machinery, 57,000 friends. So there is an inflow of rupees 4,000. Discounting at the rate of 12%. 1 to 5 factors have already been found by us. It is 3.6048. So 3.6048. 6 to 10 factors have already been found by us. It is 2.0454. So 2.0454 minus 10th year factor. 1 divided by 1.12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10th year factor is 3220. It will be deducted from 6 to 10 factor summation. So 2.0454 minus 0.322. So 1.7234. Based on that, we will compute the present value. It is 31,000 into 3.6048. So 1,11,000 748.8. 6 to 9, 53,000 into 1.7234, 91,340.2. And last year there is cash inflow. So 4,000 into 0.3220, 1288. So 1288 minus 91340.2 minus 111748.8. So it comes to 201801. Plus investment which is required to be made in the year 0, 4,50,000. And the total of both of them is 6,51,801. This is the present value cash outflow, which will be converted into equalized annual term. Next, equalized annual cash outflow. It is present value of cash outflow divided by PVIFA at the rate of 12% for 10 years. So 6,51,801 divided by 10 years annuity factor. 3.6048 plus 1.7234 plus 0.322, 5.6502. 651,801 divided by 5.6502. So 1,15,358.93. This is the equalized annual cash outflow for the second option. After this, we will evaluate the third one, that is the rent agreement. Option number 3. Calculation of present value of cash outflow and equalized annual cash outflow if machine ABC taken on rent. Friends, over here the rental expenses is something which you can definitely understand. There is no question about it. However, this is something which is a new information for you to understand. So I just explain that component. Remaining things are, I think that's very simple for you. The rent agreement can be terminated. So you can cancel it. That is by BT lapse by us by making a payment of rupees 1 lakh as a penalty. The penalty would be reduced by rupees 10,000 each year for a period of the rental agreement. What does it mean? It means something like this. Now what happens at say, as far as the leasing company is concerned, leasing company is going to purchase the asset for you and will give the asset to you on the rental. The rent agreement is basically for 10 years, so that is a useful life. Now if at all you do like this, that so you cancel the agreement in between, then in that case you are required to pay a penalty. Why? Because the leasing company will not be able to get say so lucrative deal later on. That is the reason say you are required to make payment of compensation. What is the amount of the compensation? So that is an amount of rupees 1 lakh. And that amount of the 1 lakh rupee of the penalty will reduce gradually by 10,000 over the time period. In a way that say more the time period for which you already have used the asset, the amount of the penalty that say you have to pay will be less. This is the way the information is given to us. In A part of the question, this information is of no use to us. Why? Because we are going to use it say for the entire 10 years of the life, because overall we are going to use it for 20 years. That is the reason say in the A part of the question this is not going to be relevant. Of course, this is going to be relevant when we are going to do the second part of the question, in which the time period for which we are going to use the asset is given as 5 years. Now before we proceed further, there are a few questions that I would like to ask you. Suppose for example, on 1st of January 2021, suppose on this date, I lend rupees 1000 to you at the rate of 10 percentage. An amount of rupees 1000 at the rate of 10% I lend it to you on this date. Now suppose on 31st of December 2021 I come to your residence and I ask you that say you repay the loan along with the interest. What is the amount that say you will pay me? Please write in the chat box. Yes, correct answer by everyone. Sir, it is like 1100 rupees. It is 1000 plus 10%, that comes to 1100 rupees. That is the amount that say you will pay back to me. Now understanding further, I am extending the example. Suppose instead of this date, I come to a residence on 31st of December 2022. Then in that case, what is the amount of the loan that you will repay to me? That is my question. Yes, we understand that over here it will be 1210, that is 1000 into 1.10 raised to 2. Now listen carefully. I come to your residence on 1st of January 2023 and I tell you, you pay me interest for 3 years along with the principal. Will you pay me interest for 3 years? I claim that I lent you in the year 2021, so 21, 22, 23. That is the way you give me interest for a time period of 3 years. That is what I claim to you. However, you will deny that, sir, I will not pay you interest for 3 years. I will pay you interest only for 2 years. Why? Because it is the very first day of the third year. It is the very first day of the third year. So I will pay you interest only for 2 years. That is what you will tell me. So all this discussion is basically having a point that in the financial management, we understand like this: year 0, year 1, year 2, year 3, year 4, year 5 and so on. We can say that say the fourth year beginning is nothing else but it is the third year end. Okay, the third year beginning is nothing else but it is the second year end. From time value of that is time value of money point of view, this and this both of them are same. Beginning of the second year means first year end. Beginning of the first year means year 0. This is what we understand. Okay, so write down a small note for this. In financial management, we understand that beginning of year 3 and end of year 2 is same from from time value of money point of view. Full stop. So now let us start writing an answer. Step number 1, investment. Over here, I request all of you to do first 4 steps on your own. Step number 1 to step number 4 on your own. Step number 1 is investment as usual. Then step number 2 is depreciation. Of course, we are not owner of any asset, so no depreciation, and even tax is required to be ignored. So no depreciation. Step number 3, terminal cash flow. And then also 0. Why? Because we are not owner of the asset. Step number 4 is recurring cash flow. Dear students, over here you can have more than one method of making calculation of the investment and recurring cash flow. So whichever method suits to you, you may do it. We understand something like this. As far as the step number 1 is concerned, that is investment, in that you may write 1,02,000 rupees. That is the amount of the rent which is required to be paid at the beginning of year 1, means in the year 0. Then in step number 4, you will have working like this: year 1 to year 4 and year 5 to year 9. That is a rental payment. That is an amount of 1,02,500, and year 5 to year 9 it comes to 109,950. Because friends, over here importantly it has been given that the subsequent 4 years rent is 1,02,500. That is a rent expense of 2 to 5 which will be paid in 1 to 4. And for the final 5 years, that is 6 to 10, that will be paid in 5 to 9, that is 109,950. So this is the way you can show it. Or otherwise, you may show working like this. Step number 1, investment, in that you write 0. In step number 4, recurring cash flow. In that year 0, year 1 to year 4, year 5 to year 9. In that case it is 1,02,000 outflow. 1,02,500 is again outflow. And 109,950, that is also outflow. So either of the way you can show the presentation of the answer, it is acceptable. Okay. So now this is the step number 4. Then step number 5. Calculation of present value of cash outflow and equalized annual cash outflow. So it is year 0, year 1 to year 4, year 5 to year 9. Year 0, that is cash outflow of 1,02,000. 1 to 4 it is 1,02,500. And 5 to 9 1,099,950. Discounting at the rate of 12%. Year 0 factor is 1. 1 divided by 1.12. 1, 2, 3, 4. The first 4 years factor summation is 3.0373. 1 divided by 1.12. 1, 2, 3, 4. Not useful. 5, 5, 6, 6, 7, 7, 8, 8, 9, 9. So 5 to 9 factor summation 2.2909. Present value. It is 1,02,000 outflow. Then 1,02,500 into 3.0373. 3,11,323.25. 109,950 into 2.2909. 2,51,884.46. So 1,02,000 plus 311,323.25 plus 251,884.46. So 6,65,207.71. This is the way we can compute the present value of the cash outflow. So next is equalize annual cash outflow. It is present value of cash outflow divided by PVIFA at the rate of 12% for 10 years. So over here it is 6,65,207.71 divided by PVIFA 12% for 10 years. Importantly friends, over here we have to use it 10 years factor, okay, not 9 years factor, because we are going to use the machinery for 10 years. So the 10 years factors which we already have used it over here is 5.6502. Okay, so just be little bit careful. $665,207.71 upon 5.6502. 1,17,731.71. This is the equalized annual cash outflow. So friends, the final decision is required to be taken like this. We will make a comparison of the equalized annual cash outflow for all the three options, and the option which is having least equalized annual cash outflow will be purchased, that is will be acquired, that is by XYZ. Now after completing the first first part of the question, the second part of the question is state which of the option is most economical if the machinery is going to be used only for 5 years. So dear students, we have to prepare the present value of the cash outflow for 5 years for first option, second option, third option, and the option which is having the least present value cash outflow will be selected. Now we cannot go with the equalized annual approach because it is like the time period 5 years which is less than the useful life. This is what we understand. So the answer for the B part of the question, decision making about acquisition of asset for 5 years. Full stop. In the write down over here, we will compute PVCO in bracket write down present value cash outflow for each option, comma, for decision making. Option number 1. In that, purchase machinery XYZ. Step number 1, investment. Rupees 6 lakhs in the year 0. Step number 2, depreciation. Ignore. Step number 3, terminal cash flow. We understand cost minus depreciation. Cost is an amount of 6 lakhs. First year its value will reduce by 1/3. So 6 lakhs into 1/3 minus again 6 lakhs into, what is the rate of depreciation? Rate of depreciation is 4%. Okay, so it is 4%. into 5 minus 1, that is 4 years. Because for the remaining 4 years, we will have the depreciation at the rate of 4%. So 6 lakhs minus 2 lakhs minus 6 lakhs into 4%, 24,000 into 4, that comes to 96,000. So 96,000 and 2 lakhs are deducted from 6 lakhs. So it comes to rupees 3 lakh 4,000. Fourth, recurring cash flow. Now friends, we have to consider the maintenance expense only for the first 5 years, 20,000. So year 1 to year 5 maintenance, an amount of 20,000. That's it. Step number 5 is present value cash outflow. So over here, year 1 to year 4 and 5th year. Year 1 to year 4, 20,000 outflow. Last year cash outflow of 20,000. However, there is a huge cash inflow as scrap value of the machinery 3 lakh 4,000. So in that case, it comes to 2 lakh 84,000. This time discounting at the rate of 12%. 1 divided by 1.12, 1, 2, 3, 4. 4 years factor is 3.0373. 1 divided by 1.12, 1, 2, 3, 4, 5. 5th year factor is 0.5674. Present value, then investment of rupees 6 lakhs will be added to compute PVCO. This is the first option. So, present value, $20,000 into 3.0373, 60746. 2,84,000 into 0.5674, 1,61,000, 141.6. So with that, positive 1,395.6 minus investment. The amount of the investment is 6 lakhs. So present value of the cash outflow 4,99,604.4. Importantly, we do not have to convert this into equalized annual term. After writing this answer, compute the PVCO for option ABC purchase on your own. So option number 2. Buy machine ABC. That is the next one. Step number 1, investment 4,50,000. That is in the year 0. Step number 2, depreciation, that we have to ignore. Step number 3, terminal cash flow. In that, scrap value of the machinery 4,50,000 minus 4,50,000 into 1 by 3 minus 4,50,000 into rate of depreciation is given as 6% into 5 minus 1, that is for the remaining 4 years. $450 minus 150 minus 450 into 6 percentage into 4, that comes to 1,08,000. So total of both of them are deducted from 4,50,000. So 1,92,000. That is the scrap value of the machinery terminal cash inflow. Step number 4. Calculation of recurring cash flow. In that case, it is year 1 to year 5. Maintenance expense. That is an amount of 31,000. That is a recurring cash flow. Next, step number 5. Calculation of present value of the cash outflow. It is year 1 to year 4 and 5th year. Cash flow. It is 31,000. Last year outflow of 31,000 plus inflow of 1,92,000. So 1,61,000 is inflow. Discounting at the rate of 12% present value. $3.0373. 5674. 31,000 into 3.0373. 94,156.3. 1,61,000 into 0.5674. 91,351.4. So difference between both of them is outflow 2804.9. Investment an amount of 4,50,000. So present value cash outflow 4,52,804.90. This is the present value cash outflow for this option. Now the most important option number 3. I think that is most important over here in the second part of the question. Option number 3. Acquisition of ABC machine by lease. Now over here, say this clause will come into the picture. The rent agreement can be terminated by lessee, that is user of the asset, PT LEPS, by making a payment of rupees 1 lakh as penalty. This payment would be reduced by rupees 10,000 each year. So we understand like this. Please write on a small note. As per the given information, comma, user of asset, comma, is required to pay penalty in case of early completion of lease agreement. Full stop. In that write down amount of penalty to be paid can be found as under. It is year 0, 1, 2, 3, 4, 5. Penalty year 0 it is 1 lakh. End of year 1 it will be 90,000. End of year 2 it will be 80,000. End of year 3 it is 70,000. End of fourth year it is 60,000. And end of fifth year it is 50,000. That is the way the amount of penalty which you are required to pay will reduce gradually, because you have given an opportunity to the leasing company to earn through the lease rental income. Basically, we are going to return the asset at the end of the fifth year. So till 50,000 rupees only we kept, that is we are concerned with. This is what we understand. So now going with the working. Step number 1, investment. That is the rental which is required to be paid at the beginning of year 1. That is in the year 0, 1,02,000. Rupees 1,02,000. In bracket I am writing rent of year 1. Step number 2, depreciation. In that ignore. Step number 3, terminal cash flow. Even in that case we will ignore, because of course we are not owner of the asset. Step number 4, recurring cash flow. So we understand that over here it is year 1 to year 4 and 5th year cash flow. Friends, importantly we understand that say for the subsequent 4 years, so second year to 5th year, rent is 1,02,500, which is to be paid from first year to 4th year end. So over here it will be 1,02,500. At the end of the 5th year, we will cancel the agreement. So we have to pay additionally 50,000 rupees. This is the way we will have the recurring cash flow. Step number 5, calculation of present value of the cash outflow. Please write an answer. So now present value of the cash outflow will be calculated. It is year 1 to year 4 and 5th year. Cash flow is 102,500. Lease rental of 2 to 5 paid in 1 to 4. Last year it is penalty to be paid 50,000. We have to understand that say if at all we cancel the agreement at the end of the first year, penalty would be 90,000. If we cancel at the end of the second year, penalty would be 80,000. Third year 70,000. Fourth year end 60,000. Fifth year end it is 50,000. That is what we understand. If at all we cancel in the sixth year, penalty would be 40,000. If we cancel in the seventh year, penalty 30,000. In 8th year, penalty would be 20,000. In 9th year, penalty would be 10,000. And of course, at the end of the 10th year, you cannot cancel rider because the contract is coming to an end. So the discounting rate is 12 percentage. 1, 2, 3, 4. 3.0373. 1, 1, 2, 3, 4, 5. 5, 6, 7, 4. Present value 102,500 into 3.0373. 3,11,323.25. 50,000 into 0.5674. So 28370. So the total comes to 3,39,693.25. That is what we understand is the present value of the cash outflow for this option. Now further there is an investment, that is an amount of 1,02,000. That is the rent of year 1 which is paid in the year 0. So it is 339,693.25 plus 1,02,000. So it is 4,41,693.25. This is what the present value of the cash outflow for the lease option. So friends, finally we make a comparison among these three options: purchase of XYZ, purchase of ABC, and rental of ABC. We can see that the rental of ABC is having the least present value cash outflow. So the final answer is decision. If machine is required for 5 years, comma, take machine on rent. This is the way we are required to write the answer. So this is the way we have to take the decision.